Hi there, traders, and welcome to our price action video series. Part one, which you'll be seeing now, is on the concept of anchors and anchor to a trend. So I want to describe to you how we utilize anchors and how we implement them in our trading and just how we define them also. So the concept of anchors is trying to get you in a trend and trying to get you to stay in a trend or hold into a trend, not get flushed out on a minor pullback. So what you'll see on the screen now is what we're looking at is the Australian 200 index CFD. So I thought this is a good example to try to describe to you or try to get you to look at or understand how we utilize anchors. When I mean by anchors, I mean the higher low or lower high for a trend. So in this case, when it's trending up, we're talking about the anchor to the trend up. Where is the anchor and how do we define the anchor? So ideally what we're trying to do in any trade, we're trying to keep ourselves out of a congestion zone or potential consolidation zone. And we're trying to take advantage of a momentum move when the momentum's up or momentum's down. So in this case, on the ASX 200, we're looking at this section here when the momentum is up. Okay, so you can see going from left to right, you can see that the market was caught between support at around 5,100, it's down here, and resistance zone, which it touched on a few times, up at around 52.72. So you can see it was bouncing around between there before we started to get some sort of direction move. And we didn't know, at this stage, we didn't know the direction was up. Okay, this could easily pull back, retest, and then fail again. Okay, but once we started to get this level starting to hold and consolidate above and below that resistance zone, there's a good chance that we're looking for a trade on the upside, okay, if it starts to break out. So, for example, if we bought this break on the high, we've got our risk below, and we are trading up. We're trading with the trend. So we're trying to get in nice and early when we've defined the momentum starting to kick off in a particular direction, in this case up, and we're trying to hold with that momentum, okay? So what we can see, if we go right from the start, I'll just start to draw them up now. You can see we had a little minor high low come into play here, which led to this move up. And then we got the consolidation. So you can see there's a clear level, all right, on the uptrend. So the clear level, once it started to consolidate, it was bouncing around between these minor highs, minor lows. And that we would define as an anchor. I mean, this is all in hindsight, obviously, but at the time, what we're looking at this level to hold and hold the trend up, okay? So what you can see is that the market started to hold that level and started to lift again. All right, then we started to get we get this little move up, and then we got our first decent pullback. So there's two things I want to describe to you at the moment: the minor ankles and the more major anchors. Okay, so what we can see here is we got a more major anchor coming in on that first pullback, which led to the next move up. Okay, and we're just trying to stay in that trend by essentially risk is just below the anchor. Once you start to get it to lift, we're waiting for that first pullback. And once we start to lift again and we start attacking those highs, we're happy to raise our risk level below the anchor. So that's how we would implement our trading style or would implement our risk management on the way up. And that's the same on the way down. All right. So you can see that the market started to lift and it's continuing to lift up. So this is the first decent pullback. We haven't had another decent pullback. Now we're on a 4-hourly chart here. So we could be looking for down the track if we start to fail here and we start to get some lower highs come to play, then I'll be looking for the same sort of period. Okay, if we can just, let me just give you 1 second to make that a bit bigger, move that across. You'll get the same sort of action. Okay, if we start to lift here and we start attacking those highs, which you can see the highs in here, then we've got another reason to raise our risk level if we're following that trend up, and we can raise our risk to just the anchor, below the anchor. So the way I would define when an anchor is starting to come in play is when it starts to attack the most recent high. Okay, so you've got a push up here, the first pullback. Okay, then it started to push up again. So we attack the high, so we can define our anchor as that level there. It is around 54.83. Yeah, we got the market just popped up through the high, pulled back again, and did wash out that anchor, but didn't finish below it. So it's important just to see that once we get that market actually finishing back above that anchor, the anchor is still in play. Okay, the anchor is still defining that trend. It's still holding that trend up. All right. So what we got there, it was obviously the market's rallied. So you got a rally up here. So if we just we can draw these up, the key levels, or sorry, the key moves. So I'm going to draw it in green. I'll give you another green, something a bit better, a bit brighter. All right. So we've got first leg up here. We've got our secondary leg up here, and we're on to our third leg, and it hasn't quite finished yet. I mean, we could be running into a bit of resistance here, we were running into a bit of selling up here, but it's yet to play out. So this leg up is still intact. So the second way I would use my anchors, if I'm trading off, this is the bigger trend, I'm trying to follow the bigger trend up. The way I can also define my anchors, so I just draw on the pullbacks as well, draw those in red. So we've got a sort of minor pullback here, we've got a minor pullback here, and we're yet to see that third pullback just yet. So what I would be doing is within this leg up or this minor trend up, so we've got the major trends intact and we're waiting for that pullback. So we're waiting to see if we can define our risk a little bit better on a pullback and see if it kicks off again. Now, if we do pull back, touch on that anchor, touch on the highs and we've raised our anchor and then we turn around and get stopped out, so be it. That's the way it is. Okay, so we're trying to run with this trend. We're trying to take out as much of that trend, those gains as we can, and we're looking for a bigger move. For whatever reason, we could have defined that from our longer term charts on a 4 hourly. We could define it off a daily or a weekly, but we defined this trend has got quite a lot in it. And we're trying to take out as much as that trend as we can. Okay, so if we look at the inside, so not the inside trends, but each individual leg up. So there's ways to, I mean, if you did say $50 a point and you wanted to take off profits in stages because you know that potentially there's 3 waves in this leg, in this move, you're into the 3rd wave now, how do you manage your risk or how do you manage your profits if you get it right? So what we could do is define the anchors within the smaller trend. So this is going to get a little bit complicated, but the theory behind it is still the same. So if we just go, I want to make that, let's make it yellow just to make it a little bit easier to define our anchors. Okay, so we've got a trend up here and you can see once this trend starts to lift, you can see there's minor pullbacks to the anchor and the market pops up, a minor pullback in here. Okay, then we've got another minor pullback in here. And if you've got your risk below here at this stage, the market's extended, you're waiting for a pullback. As soon as it starts to extend again and attack this high, you can raise your anchor level and raise your risk management, okay? And then we start to pop up. We have a little minor pullback here. So again, the anchor is still intact. We raise that anchor as soon as we start attacking these highs. And then what we got from there, this anchor is still intact right up until about this stage when it broke down. All right, so if you're looking to take some off and you don't know how far this leg is, you don't want to anticipate where the high is. What you're trying to do is utilizing your anchors is to define some risk. So if the market starts to push through this level, you might take a portion of your trade off, a third of your trade or a quarter of your trade or half your trade, however you want to do it. Because you know that, okay, we've got that first wave up. We don't know if that's going to completely capitulate after that or whether they're going to expect a secondary wave. Now, we do expect a secondary wave of this overall trend, but we're happy to take some risk off the table, lock in some gains. But the bigger risk for the overall trend is still below here. We've just taken some off the table. We sat through a secondary pullback, and then we start defining that trend up again. We do it by the same method, utilizing the anchors. So you've got an anchor here and a minor pullback there. A little minor anchor just comes in here. You can see this leg up was pretty much intact. Then we've got a first little pullback, second or third little pullback a bit later on. Once you start attacking those highs, again, you can raise that risk level to just below that anchor. You're not sure if that's going to be a double top, if it's going to go through or if it's going to be anchor, but either way, your anchor now is just below this level, 59.54. So you've got your secondary leg. If you've taken your entry somewhere in here, let's just say, for example, your entry is somewhere in there. You've taken a part off, okay? On this, once we start getting in this, a bit further into this secondary move up, you've now raised your stop loss or your risk management on the overall trade to just about break even or just above break even, say just below this first anchor on the longer term trend, because you've got one pullback, start attacking this high. You can see it starting to get through. Okay, you're raising your risk management on the total trade just below there, and you're looking for a second or a partial exit as we continue on the way up. Now, you can see there's not really, look, we can define that as an anchor now, and I probably would, purely because we're just touching on these highs at the moment. So I've got my anchor set at around 60.70. All right, so if we've got an entry from somewhere around 56.90, 56.20, we're sitting somewhere on our second partial, just waiting to either get stopped out or raise the anchor again on this leg up only, and lock in further gains if we break up and continue on with the trend. If we turn around and break, then we're looking for this price action to play out. So I hope that made a bit of sense and gave you some sort of idea of how we utilize our anchors to a trend. Now, depending on what time frame you're looking at and what sort of trend up you're looking at and how you're attacking the market, now it might be different. We were saying that the market was jumping around between support and resistance. So we earlier defined that, and we're looking for that momentum shift from sideways to momentum up from the buyers. And we defined that once we started getting our breakout of this level here, then we know that the trend is on, okay? Or we're looking for that trend up to continue to start to really solidify, okay? And that's why we took our entry on this push through here, maybe push through the highs, risk just below, and it turned out quite nicely. All right, so then we started defining our anchors for risk management purposes. All right, so you can see how, this is a good little example of how we do that and how we utilize our anchors. And I think it's a very important part of trading that a lot of people don't understand, okay? Because you're trying to understand when that buying is taking a breath, or when is the bigger time frame pullback due, or you don't want to just try to pick the top or pick the bottom. In a downtrend, if you're trading on the downside, you don't want to try to pick the top here and say, look, I'll sell it here, and find out it keeps going for another 100 points, because then you've left a lot on the table. But by utilizing the anchors and trying to trade off the fact that it's got to break down the anchor for that major correction to start to play out, break the anchor to this trend. So we broke the anchor there, we got the major correction, and then the third leg started to play out. Then we know that something big is happening, okay, if that makes sense. Well, we hope you enjoyed that, traders, and thanks very much for listening. Remember, if you did like our video, please subscribe to our YouTube channel for more great content, and sign up to the website to get access to all our premium videos for free. Speak to you again soon.